It is. I think infrastructure development is an overlooked and under-discussed macro theme. I think, generally speaking, investors, financial markets have looked at infrastructure, be it transportation services, materials, the infrastructure developers, as this sleepy, boring corner of the market. Doesn't move much. But back to my original point, that technology, where the opportunity is rapidly colliding with the physical world, right? So we have to ramp up the build out of many of these facilities. Look at what's happening with data center construction here in the US. I saw this chart where data center construction is now overtaking the construction that we have on commercial and office buildings here in the US as well, which I think is a very secular trend. Again, we've not seen this level of disruption in the physical world, and I think that takes a lot of more sort of understanding to really wrap our minds around what's happening here. The other side of it is this is not just about constructing data centers, like you said, right? Look at the power grid, look at power production facilities. The US power grid was not designed for the AI age. It was designed for a period when the population was probably 40 to 50% lower than where it is today. Projections right now suggest that data centers could consume nearly 10 to 12% of all of US electricity by the end of this decade. So, where do you really bring this power from, and how do you transmit this power in the existing grid? So, I think trillions of dollars will likely be directed in terms of capex to really bring that capacity of power production online, but also to revamp the power grid to make sure that these data centers can get the right amount of power that they need. That's a risk you will always have to face, no matter what, especially when it comes to building physical infrastructure that goes in line with technology. Well, the good news there is we are extremely early in this build out phase, right? So I think if you consider ChatGPT as the marker, we're barely, I would say, 36 months into this build out period, and I think this build out will continue to move forward. Some of the key things that are different, I would say, relative to the fiber build out that we had seen during the internet age is, number one, today majority of the investments around infrastructure are being driven by really profitable uh, technology companies that have a resilient balance sheet and that who can afford to invest. Right? I think that's very important. If you look at the fiber build out or the telco build out during the dot com bust, a lot of that was driven by private equity money, but also you had these telco companies who already had pretty stretched balance sheets, so they had to be more, let's just say, aggressive in terms of making these allocations, in terms of pulling back spending when there was no return on that spending. Contrast that to what's happening today. Big tech is able to drive returns. Look at a company like Meta Platforms, for example, that is investing so aggressively in AI. They grew 22% last quarter. And this is in a period when we had so much tariff related volatility and they had all the excuse for ad spending to be generally pulled back. So I think we are underestimating the ROI or the addressable market that many of these AI technologies can capture in a very short period of time. And that's really the opportunity that these companies are going after. As long as we can keep that ROI loop closed and tight, I think the risk to AI infrastructure pullback is minimized.